Hi, I'm Kelly Eckhold, Chief Economist here at Westpac New Zealand. You might recall the last time we talked, I mentioned that the labour market report for the March 2023 quarter would be keenly watched by the Reserve Bank as they consider what to do about interest rates at the end of this month. That report came out and indeed it showed that the labour market still remains pretty tight. That's most evident in the unemployment rate, which remained at a really low level of 3.4%. And in addition, wages growth still stayed pretty robust, although that's probably what we should have expected given that wages tend to lag the general labour market by some time. So what do we take from what was going on in the growth of employment? Well, employment growth was pretty strong, and that reflects both supply and demand factors. On the supply side, we've seen a real increase in net migration, which has added a lot of supply of workers into the economy, and those workers have been gratefully received by sectors of the economy who have been crying out for labour over the course of the last year. In particular, in those sectors that have been benefiting the most from the return of tourists to New Zealand in the last 6 months or so, in the hospitality sectors, hotels, restaurants, transportation, etc. So, looking forward, what do we think this will mean for the Reserve Bank? Well, one thing that this strong growth in jobs means is that there's not really sign of a recession having taken hold in the first quarter of this year. That's largely expected, but you might remember that the Reserve Bank anticipated a pretty significant turnaround in the labour market over the balance of the year, ending the year with an unemployment rate of 4.8%. So they'll be looking for signs of a turnaround pretty soon. For our part, we anticipate that the Reserve Bank is still going to be comfortable in putting interest rates up 25 basis points to 5.5% when they make their decision towards the end of the month. And that would be in line with what other major central banks did this week. Both the Reserve Bank of Australia and the US Federal Reserve increased interest rates, but at the same time signalled that they were either at or very close to the peak of their tightening cycles, and we suspect that's where the Reserve Bank will find itself when it considers its rates at the end of this month. I'll see you next time.